thought you made the call that markets would tank if President Trump got elected.
I retracted it very soon afterwards, and I did what you should never ever do, which is to let your political biases interfere with your judgment. I thought this is a terrible thing, which it was, but it isn't necessarily going to be terrible for every indicator. And so it was.
So this is a mea culpa.
This is a mea culpa. I did a mea culpa.
I did
already.
That.
Yeah, I've done that already.
Yeah,
no,
did.
This was me doing exactly what I tell people not to do, and it's going to happen. We're all mortal. One thing is worth saying, by the way. We talked about there's a Trump bump. There's also a Merkel bump, a Macron bump, a May bump, an Abe bump. Stock markets have been up all around the world, so something's going on. People like stocks, and why do they? What is the? God knows. I always quote my old teacher Paul Samuelson, who said that the stock market had predicted 9 of the last 5 recessions. The market may not be telling us much of anything at all, except that for some reason people are liking stocks.
We had a viewer question, actually, and I think you've kind of already answered it there, asking whether the Trump stock bump reflects a fundamental change to the economy or just the expectation that business owners will eat a larger piece of the pie, with employees and the public at large eating less pie and more externalities like dirty air and water.
Yeah, or it might just reflect the fact that investors think that other investors are going to pay more for stocks. I mean, it really doesn't have to mean anything much at all. Let me say something. I am a little surprised that the market doesn't worry more about the downside of a totally catastrophic response if something bad happens. What if we have something really bad happens and they handle everything the way they handled Puerto Rico? That ought to be some kind of weight on the market, but we know that markets tend tend to ignore those things until they actually do happen.
I wanted to play for you a comment from Richard Thaler, the Nobel Prize-winning economist, on what he thinks about what's going on in the stock market. Take a listen.
Curious.
I don't know about you, but I'm nervous. And it seems like when investors are nervous, they're prone to being spooked. And nothing seems to spook the market. As you said, it just crawls up slowly but surely. And if it's all based on the expectation of some big tax cut, surely investors should have lost confidence that was going to happen, given what's happened so far out of Congress.
Especially what we've heard of late, Joe, which is that the president's going back to tweak the tax proposal.
Right, so there's all this uncertainty, as you said, like we've seen an example of disaster response in action. Yeah. It hasn't been impressive. There's active saber rattling about North Korea now almost every other day. Threat of armed military conflict. So is your theory that basically markets are not really good forward discounters and basically just take into account what already happened?
Yeah, it's not, isn't even really a theory, that's an observation. We know that. And some of us, again, remember the housing bubble. And that was the clearest thing I'd ever seen in my life. That was just overwhelming the numbers. And yet, month after month, the prices kept on rising, and people kept saying, if there were really a bubble, surely it would have burst by now. And then one day it did.
Do you see a bubble right now?
It's much less clear. Let's put this. Profits are high, interest rates are still very low, so it makes kind of sense for stock prices to be high given that. It's more, in this case, I don't see it's a really overwhelming bubble. I just think that there's a disaster risk that the markets are not taking into account.